Ladies and gentlemen, welcome back to the Stockcharts TV studio here in Redmond, Washington. So good to be with you. I'm your host for the show. My name is Grayson Roze, Chief Strategist here at Stockcharts.com. I am joined by my good friend, you know him, you love him, Mr. David Keller, President and Chief Strategist at Sierra Alpha Research. Across the desk, there you go. How are you?
I'm well, man. Market conditions aside, doing well, still smiling.
This market's keeping you entertained, right?
All of us, I think, yeah.
Okay. If you had to describe this market in one word, what's your one word of the day?
My one word. Challenging is the word.
Challenging.
But to be honest with you, if I could have like a couple words, fantastic learning experience would be my three-word phrase.
All right.
Because honestly, thinking back through my experiences in the market, I've learned way more and grown more as an investor during challenging bear periods. Bull markets are great.
Right.
Your portfolio hopefully grows, but they're boring. There's not a lot of great learning opportunities when you don't have to worry about risk, you don't have to worry about bad decisions. Bull markets cover up a lot of bad habits. I feel like for a lot of investors, 2025 is sort of uncovering all those little bad habits we've accumulated in the bull phase. So good opportunity to grow.
We learned a lot of lessons in 2022, and then I think a lot of people forgot a lot of those lessons in 23 and 24.
It's a long time ago, right? It was a long 3 years ago when we had that.
It's funny how we go through those cycles.
Always.
Yeah.
Always.
So we are doing something fun today. We are picking 10 charts to watch for the month of April.
Yep.
Okay. We're kicking off Q2 here on a high note. Before we do that, though, this is a crazy climate, right? This is a little bit different than the climate we've done this special in many months in the past.
Yeah.
I want to get your thoughts on that. I want to hear sort of from you. I know you've got some concerns about this market. So what's keeping you up at night? What are you watching?
When you think about when we've done this sort of discussion in 2024, it was challenging because the market was overall fairly strong.
Yeah.
It was dominated by mega cap growth names.
It was.
So the challenge was, how do you find things that are outperforming? How do you find things that are doing well? And that's what you and I struggle with sometimes. Just which names do we think could do better than average?
Right.
This is a very different look and feel. And I think the conditions from November and December of last year to the conditions February, March of this year, dramatically different.
Yeah.
In terms of just basic trend analysis, in terms of breadth conditions, sentiment, all of that has shifted. So it's a completely different environment. And the markets generally love certainty. They love having a sense, investors appreciate a clear perspective of where things are headed. It's very much, given the political climate, given the geopolitical environment.
Not a lot of that right now.
No, and I think so generally I would say I'm fairly defensive in terms of positioning and in terms of outlook.
Okay.
I think the challenge is anything related to the consumer. From a non-technical perspective, anything about consumer sentiment has been weaker than expected.
Yeah. Anything
involving inflation has been higher than expected.
Yep.
That generally means companies have to downgrade their own expectations, and I think investors do as well. From a technical perspective, I would argue we've had a big bear flag pattern in the S&P 500.
I know you were writing about that last week.
Yeah, last week we talked a lot about the bear flag, which is a big move down, and then this kind of counter trend rally sucks a lot of people in, and there was a lot of instant short-term optimism peppered in the market because stocks like Meta and others kind of bouncing. I think in the last couple sessions we've seen a reinitiation of the downtrend. So I think the S&P goes lower from here.
Okay. Now, I want to ask you, too, so the way this special is going to work, right? Yeah. You're bringing 5 charts to the table. I'm bringing 5 charts to the table.
Yeah.
I want to know that market condition that we're talking about and kind of your concerns and things. Are you letting that invade the way that you're picking these names, or are you still looking at them through the same lens? You're picking good charts. You're kind of just letting them ride. How is it affecting you?
That's like a whole hour-long webcast
kind of
answer right there.
Answer in 20 seconds or less.
So the quick answer is no. So for me, no, because I would say, for me, that macro perspective informs positioning in terms of allocations. Like how much risk do I want to be putting on?
Right.
How much do I want to be focusing on raising cash? Or I always think, do I want to focus more on capital growth or capital preservation? And I think this is one of those times when you want to be preserving capital and raising cash, because at some point the market makes a low and you're going to want to get back in, which means you have to not be in the whole way down.
Yep.
So this is that. I think this is that time. For me, it's the scanning engine on Stockcharts. This is. It's always helpful, but this is especially one of those times.
Especially right now.
And to be honest, as a sort of foreshadowing of what we'll talk about from my side, I used I think a Grayson Roze screen where the moving averages are in the correct order.
There you go.
That's
I love
one of the
that.
sample scans that we have.
Well done.
And it's beautiful because it looks at a configuration that says, despite what's happening in the market, which charts are actually in a positive uptrend based on the order of the moving averages. And I found a couple ideas that we'll share with you from that scan.
I like that. We're going to look at a couple of those charts.
Yeah.
I mean, it's kind of the same for me, I got to say. No matter what's happening, you still got to sort of keep an eye on what's working, keep that list going, keep that watch list going, make sure it's populated.
Yeah.
But it's going to change the way that I trade them. It's going to change the way that I'm actually investing. Yeah. But the way that I'm sort of finding these names and thinking about them and building up those watch lists, you got to keep the process going through good times and bad.
And it's funny. I mean, even some of those sample scans, they're still coming up with ideas, even in this environment. I think that's a great reminder.
It becomes easier to find them. That's the funny thing. I was saying this actually to someone the other day. They were saying, "Oh, is this like the craziest environment? You can't find anything." And it said, I said, no, it's actually kind of the opposite. When you're running these scans for strength, there's not a lot of strong things out there, so they levitate right to the top. Makes it easier to find.
Yep, agreed.
Okay, so you're going to start us off here.
Yeah.
What is your first chart to watch for Q2, month of April? We're kicking it off, Dave Keller.
So, I mean, there's a defensive theme to things I'm going to share with us, with everyone today. But what's so funny is the first three names are all consumer names, to be honest with you. Or at least the first two are definitely consumer names. First one's TJX.
Okay.
This is honestly, it's probably more of a staples kind of name. I mean, it's a low-cost retailer, right? Clothing goods and other products. But from a purely technical perspective, I'm looking at areas of the market that are still demonstrating strength. And I think the general way you think about stock picking in this kind of environment is you focus on things that are not breaking down when a lot of other things are. You focus on things demonstrating strong relative strength. And that's what immediately drew me to the chart of TJX. It's making a new multi-year relative high just in the last week. And so this is the relative performance of TJX versus the S&P. In an environment where the S&P is going down, where the Nasdaq's going down, you really want to find things that are outperforming, which means even if they're not gaining a lot on an absolute basis, they're doing better than the benchmarks, and that is how you outperform in a down market. In terms of general takeaways, the relative strength is good. That's encouraging. We traded below the 200-day moving average, but just in the last couple weeks appear to be bouncing above there. So I think as long as that holds, this is still a pretty decent chart. It could be a good pullback. I would say generally, I would feel much better about this chart if it breaks above the previous resistance, right? From November, December, February, all around 127. So for me, it's sort of like an initial speculative position with this kind of chart, and then that's where you kind of complete the position when it breaks to new highs. I think that would be a nice upside follow through. The momentum is not quite there yet, but it's okay. I think the RSI pushing above 60 as we break out, that would be sort of the bull case from here. But generally, hiding out in areas that are showing strong relative strength is a tried and true approach in a bear market. That's what immediately drew to this. I looked for charts with relative strength breakouts, and this came out.
This is that. No, I'm looking at those at that relative strength line there, breaking out to new highs, and a chart that's just consolidating within a beautiful uptrend. This is an interesting name because it's a little bit stapley discretionary. It's kind of one of those bubble stocks.
It's indiscretionary, but it doesn't feel like the other names you'll see, like luxury retail and other. This is sort of an outlier of sorts.
Okay. I like it. My first pick is, this is going to be a theme for me, okay, throughout the show today. Groups. I'm spending a lot of time looking at groups right now because if you're thinking about putting on new trades, individual names, there's a lot of times where these individual names are suddenly getting hit. There's a new tariff comes out and you see some individual name just get absolutely smacked in the face. So I'm spending a little bit more time in this environment looking at groups that are working. The group that is working is insurance stocks. And on an individual basis, you're seeing a lot of these stocks absolutely flying to the upside, breaking out relative strength, thing of beauty. But the group as a whole, IAK is going to be my first pick. That's the U.S. insurance ETF. This thing is breaking out within a gorgeous uptrend. You talked about moving averages all in the right order. The 20 is above the 50, is above the 100, is above the 200. This thing hasn't even tested its 200. Hasn't been anywhere close. Hasn't even tested its 50. It's bounced off the 20 a couple of times and moving higher. This is a group that is heavily outperforming the market. And what I think of, when I'm looking at relative strength, the market is sending you a signal. That's ultimately what relative strength is. It's the market sending you a signal, sending you a sign. When you see a group like this that is heavily outperforming the market in a time of weakness, not only is it moving higher, but it's moving higher a hell of a lot faster than the market.
Yeah.
That's a big, big sign. That's the market sending you a sign. So this thing I think is just absolutely gorgeous. I do want to see it chop around these levels just a little bit, maybe kind of consolidate around some of those highs.
Yeah.
But again, it's holding those moving averages, those key moving averages that I watch, especially on a short-term basis, bouncing off the 20 like we saw here kind of at the beginning of March, and then moving higher. Really a beautiful uptrend. Not a lot to dislike about this chart. And the fact that it's not just one or two individual insurance names, some of the big ones that are moving this thing higher, when you actually drill into that whole insurance group, so many of these stocks, they keep coming. It's like the one group that keeps coming across my screens for stocks making new highs. Oh my God, so many of those insurance names are moving to the upside. So this, I think, is a very, very strong chart to watch for the month of April.
It's a great example, and the classic kind of offense versus defense is a more defensive side of financials.
Right.
So when insurance looks this good, it's one of those like, you know, it kind of lines with the macro discussion we're talking about.
Yeah.
I would also say, I mean, everything you said, agreed with. I love the moving average configuration, kind of a cup and handle pattern.
Yeah, a little
recently,
bit.
Just starting to break out a little bit, which is a classic Bill O'Neill, you know, kind of extended or kind of breakout pattern.
Especially if you change this to like maybe a 1 year chart, you can see that a little bit better. That there's your cup, there's your handle. Yeah, I think that's a gorgeous point on that chart, Dave.
Yeah.
Insurance absolutely moving. That's
nice setup. Good area of the market show. And honestly, it's like if you didn't know the market was struggling so much, the chart of insurance just looks like a great chart in any environment, but especially in this kind of environment. I like it.
All right, number two, what you got?
So now I'm going to go to the defensive side of consumer. I'm going to Keurig Dr. Pepper, KDP. I mean, and we've talked a lot in our conversations and other times. You know, when you think about offense versus defense, you know, when conditions are good and consumers have extra money to spend, they buy discretionary things, travel, tourism, new watch, new clothes, whatever. Beverages you just kind of have. Like if you drink Dr. Pepper, if you smoke tobacco, alcohol, toilet paper, like these are things you need. And it's not like you upgrade them when you got a lot of discretionary income. They're just, that's kind of what you have. And so these are areas of the market that tend to be a little more immune to economic weakness. They're things that tend to thrive because investors know they're probably going to do okay while others are probably struggling. So from a technical perspective, KDP is one of those breaking above its 200-day moving average, and that's what drew me to the name. Was so many things, particularly growth areas of the market, breaking down through their 200-day. Over half the S&P names are below their 200-day moving average now. Names actually breaking out above their 200-day are pretty encouraging. So I actually have a screen of stocks breaking above their 200-day moving average after being below it, and that's where KDP came to it. And so we had a number of failed attempts to get above the 200-day in the fourth quarter of last year. We finally broke above there in February, but then stalled out and traded back below. But I like the fact that we're now starting to recover. This is the kind of chart where I like to sort of go with the kind of basic, straightforward trend line approach. You draw a trend line off of the recent lows. We're making higher lows, which is encouraging. As long as we remain above that trend line, things are kind of not getting that bad, and the trend is overall, you know, consistently moving higher. I like the fact that the momentum has shifted from more negative in the fourth quarter to more positive. So the RSI kind of in the bearish range below 60 back here, now in a positive range above 40, and the relative strength is improving. And I would say that's a consistent bullet point with all of my names, improving relative strength. I think that is an absolute must-have on a chart you're taking a shot on right about now. So I like the fact that it's improving relative strength, improving momentum, back above moving average. And so I think as long as it holds the 200-day moving average, this is the type of name I'll follow as long as it continues to go higher. In a defensive area of the market, which probably does well if what I think is happening with the S&P actually follows through.
Now, I got to ask you, I mean, I'm looking at this chart and I'm thinking about that, well, a couple of gaps on this chart. This thing had a sort of a rough fall in 2024. Now we're sort of pushing back. We've pushed back up through one of those gaps. We're pushing back up towards the other one. How do you think about those gaps? How does that shape? If you did put on a trade on a name like this, how do you think about that gap?
No, it's a really good question. And this had a really rough beginning to the fourth quarter, a couple gaps lower, and it really accelerated to the downside. So for me, there are a number of different ways of thinking with gaps. I tend to just use the annotations tool on Stockcharts and draw just a rectangle.
Yeah.
That was an Arthur Hill trick he taught me years ago, which was just think of that as a support and resistance range. So I think that range from like 32.50 to 33, that's your one range, and then up here like 35.50 to 36, that's a range as well.
Yeah.
You just sort of draw a rectangle to extend it over, and that you'll see that gap from mid-October lines up really well with this kind of bearish doji candle of sorts here. So we literally traded right up to that range before selling off. So again, you and I have talked a lot on these discussions before about laddering into positions. This is the kind of thing where maybe you take an initial position, and then if we're able to power through that gap, which is what we were not able to do in February, if we're able to follow through there, then that's maybe when I complete the position.
Right.
This is the kind of this is the time in market cycles where I don't feel like taking aggressive initial positions is probably the best approach.
Yeah.
You sort of take initial positions, so you're not putting that much at risk, but if it kind of works, you power through it. So this is where I probably partially go in, and then a break above that resistance range and above the February peak would be sort of the all clear, this is going higher. So most charts that I use, particularly in my own holdings, I have all these rectangles, and it's highlighting the previous gaps just so I know where they're at.
Yeah, horizontal lines. I love these kinds of setups where you actually have sort of a lower breakout and then a higher breakout to play with.
Yeah.
So it does, bring in a little bit of overhead supply to the name.
Yeah.
But if you do get through that initial breakout, you take maybe a first position there, you've got another breakout to play with, which is another really clear horizontal level to draw.
And if we finally get above there, that means something.
Then it's
that means
like,
something,
okay, green light.
Yeah.
Really nice chart there. Okay, my second chart. I'm going back to my groups. I said my theme for this show is groups. So I am doing ITA. This is U.S. Aerospace and Defense.
Okay.
I don't know if you've heard, but there's been like some sort of conflicts around the globe recently. Just a couple little skirmishes. Aerospace and defense is kind of an interesting theme to be thinking about, given what's going on around the globe right now. This is a group, though, that, again, kind of similar to insurance, has been just making this beautiful move higher. This is a gorgeous uptrend, and we've now seen this consolidation over the last couple of months. So consolidation within an uptrend, that's the type of thing that I like to see. Again, draw your horizontal lines, draw your rectangle. This kind of sideways trading action within a broader uptrend, that's the type of thing that I like to see. It gives you those tradable levels. But on top of that, if you look at that panel up at the top, again, relative strength coming out of this group. This is a group that is outperforming the market. As the market's moving lower, this thing is not really getting hit nearly as bad. Now, it's not breaking out in the same way that insurance group is actually breaking out to the upside. This is still clearly within that consolidation range. But when you look, again, at that relative strength line here, it is very, very clearly outpacing the market. So buyers would rather be in this than the S&P 500, let's say. That tells me something. That's a sign, that's a signal that's coming from the market. So this is one that I definitely want to watch. Now, it's struggling here a little bit with its 50-day moving average, bounced kind of up into that today. So a couple of things to watch there. But I think more clearly, you've got this very clear sideways consolidation pattern in this name. So you draw those horizontal lines. I've drawn that green line across, which is kind of the top end of that range. That would be sort of the range that I'd start to get interested in this thing. And I like to actually use these horizontal line indicators on my charts because it means that I've got that line sort of very clearly drawn. I can actually put a specific price in there and kind of see, when we get close to it. And if I'm setting alerts, you can actually set alerts here from the workbench. It's really, really easy to kind of align your price alerts with those kind of levels that you're watching on your charts. So I actually like to keep these horizontal line indicators on my charts and sort of fill those in with levels that I'm curious about. In this case, I've got one horizontal line drawn across this thing.
Yeah.
Sometimes I'll have 3 or 4 of those things that are sort of signals of strength if it can get through those different levels. But definitely an interesting one to watch here. ITA catching my eye.
The horizontal line indicator, that's a good takeaway that I just remembered.
Yeah.
Not one that I usually think about, but it's such a better way. I'm often kind of drawing lines on the chart a lot, but that is a really good way to just enter stops or alerts kind of levels.
Well, okay, so this is where we'll do a brief tutorial here.
Yeah.
This would be sort of a target entry, let's say, and if you actually look down at this chart, I've got a bunch of other horizontal lines in here. I've got a solid, thick red line. I've got an orange line, blue, and gray. And so these are actually built into my chart template. So when I take on a trade or when I'm planning out a trade, let's say in this case, I wanted this to be my entry. I like to use about a 10% stop. So you could draw, a 10% line down here using the inspect tool. You're at about 141 bucks. I can now come down to here and say, okay, 141 is going to be my ideal stop on that. And now I can see really quickly, this is a planned out trade basically. I've got an ideal entry and I've got a sort of a projected stop. I can use these blue and gray lines to actually draw sort of price targets. And I can come in and draw, I use the orange line to draw basically a level of concern. So my stop would be maybe at 10%, but here's about 148, 149 bucks. That would be kind of an area of concern for me. So if I did put on a trade like this and it started to cross down through that orange dashed line now, I would say, okay, it hasn't hit my stops yet, but the trade's not working. Maybe it's time to move on, get out of this thing and find something else. So by having these horizontal lines in my chart template, it actually allows me to plan out trades really, really quickly, whether they're positions that I have or sort of watch list items.
So your chart template has those horizontal lines just with no values, and then you just pop in there. That's a pro move right there. That's power user work.
It's very cool. We've done videos on that in the past and things. Maybe we'll try to link them in the description below. But
I like that. Okay, I learned something today. I'll take it.
Okay, ITA. That's my second pick of the day.
I like the pick. All right. What
do you got for number 3?
So here we're going back to consumer, and then I promise this is the last one, and I'll go
back to
else.
consumer.
But this is this is grocery stores. Kroger, KR. Food retailers, same thing. I mean, we have to eat no matter what we think, no matter how much discretionary income we have. Basic human necessities are still going to be on our list, and we'll sacrifice other things, but we'll keep things like groceries and such. And, that theme aside, from a technical perspective, kind of looks like a growth name, right? I mean, if you look, higher highs, higher lows, above 2 upward sloping moving averages. This came from that moving averages in the correct order scan that I think you added to the sample scans, which is a brilliant one. That's the kind of thing that I like to run and just have scheduled all the time, just to keep reinforcing, regardless of what's happening in the world, what are the names that are just working, right? Just classic uptrends. So from top to bottom, it sort of checks all the boxes but one, which I'll share with you in a minute.
Okay.
Uptrend, higher highs. I love the fact that each pullback is making a higher low. Like, that's just classic bull market behavior. So at a time when very few things, there are not many S&P names currently this configuration. So ones that are, I think, immediately are pretty decent ideas. I'll come back to the momentum, but I'll just point out in terms of relative strength, we're making new relative highs today. So the stock's actually up today while the markets are struggling a bit on a Monday. So again, I like the trend. I like the further upside. If there's one thing that concerns me or one thing that's not ideal, it's the bearish divergences, and I'm immediately on Kroger looking back to like March, April of last year. Kind of different because we had this big acceleration and the big gap higher, and this is when the markets in general were doing quite well. But the sort of bearish divergence where you have higher highs on weaker momentum often tells me, going to baseball terminology because we're in the opening week here, it tells us we're in the 8th or 9th inning of the uptrend maybe, and not the 2nd or 3rd inning. So, maybe a pullback is coming because we're having weaker momentum conditions. But overall, I think the setup is good enough, and the relative strength is strong enough that I'm happy taking a look at a name like this. And then with a lot of these names that are in good primary uptrends, the weekly chart is just one of those classic kind of bull trends. And when in doubt, zoom out. When you see something that's working, you go to the weekly chart, bring in a lot more data, and you can see this is just a name that's really starting to emerge from a broader breakout that was the 2022 high, the 2024 high. We're finally above there. So I think betting on a trend like this continuing to work, I'm pretty happy making that bet in this environment.
Nice scooter on this. I like that you have the full quote up at the top of the chart. And actually, another nice thing is that the next earnings date is actually quite a way out in the future, which is good. So you got some runway on that. I'm glad that you brought up the weekly, because one of the things that I have on sort of the way that I've set up my charts, I've got little tabs on the side, just like you've got your style buttons over there. And I've got a 5-year weekly chart, same exact chart across all these, but different time frames. A 5-year weekly chart, a 7.5-year weekly chart, and a 15-year weekly chart. What that allows me to do is like quickly bang through a couple of different sort of time frames. And like you said, just zoom out, really quickly zoom out. I just did that with Kroger as you were talking. across all three of those durations, 5 years, 7.5 years, and 15 years, Kroger has outpaced the S&P 500. Who would have guessed
Things I would not have guessed.
Yeah, no one
until
had
this
that
moment.
on their
I know.
bingo card.
It's true. It's true.
That is crazy.
Yeah, but honestly, that's one of the beauties of charts is it's not about what should work or what you think might work.
No.
And one of my analysts at
It's
Fidelity
what's
used to
working.
say, charts are the truth serum for the market. So
Yep.
lessons like that, fantastic.
I like
takeaways.
that.
Yeah.
I like that a lot.
Good one.
Okay. Number 3 for me is going to be financials. We kind of already touched on financials a little bit because we had insurance stocks in there, which I don't know. I separate financials just has so many different buckets to it, like so many other sectors. But to me, when I think financials, I'm thinking the big banks, right? Insurance and other names are in there, but XLF, though, the financial sector as a whole, now obviously this is going to be cap weighted, so it's going to be pushed towards big stuff like JP Morgan. But this is another group that's holding up incredibly well. Doing really well today, too, which is nice to see. We've got the market, like you said, hurting a little bit, but we've got XLF actually up. The relative strength on this thing, though, is just gorgeous. And it's not just gorgeous in the last month. It's gorgeous in the last, this is about a year. This is crazy. This is a beautiful uptrend. Again, a nice consolidation range here. We're moving sideways, but we're testing kind of the upper levels of that range. We're still a little bit at the midpoint, but we're starting to push up into the top half of that range, right? Some really interesting levels to watch. And this is just a group that's outperforming the market. Yeah. I also like that this does have some sort of theme to it behind it. Obviously a lot of, banking deregulation has been a theme that's been discussed with the new administration coming in. If you think that's going to play out, and if you do think that is going to be a tailwind for the banks, then I think XLF makes a lot of sense. You got a little bit of yield on this name as well. Yeah. Super strong scooter. I mean, up in the 90s, that is about as strong as it gets. If this thing can push up just a little bit higher, kind of get above 50, I think this becomes a really interesting one to watch. But again, just that beautiful uptrend now consolidating over the last couple of months. And if we can get a breakout there, you've got relative strength behind it. You've got some thematic strength behind it as well. There's a lot to like here. Yeah. Do you see anything on XLF?
I mean, I think the argument for XLF, look at the relative performance of the technology sector, and then do that first. Yeah. Prime yourself with that, and then look at this one and the relative strength. I mean, it's so dramatic, and a number of the value-oriented sectors doing much better than tech. But I mean, it's just a totally different feel. I think what you mentioned, sort of the sideways action with a couple of your charts. This one, I always call it kind of a natural stop. If you have the lows from January and March, right around like 47, the 200-day moving average is kind of right almost there.
Yeah, it's picking it up.
So taking a shot now and then just having a very clearly defined risk level, I think makes you just feel a little more confident in having it work. Biggest weight in the XLF, by the way, Berkshire Hathaway, which I almost picked that one.
Right?
It's a great chart. I mean,
everyone
just
forgets that.
Fantastic chart.
Yeah.
And just a long-term outperformer. So, I mean, it's not just the banks. A lot of those other big names and financials are real good.
That's true. Yeah. But a good space right now. And actually, I was tempted to drill into some different corners of it as well. I guess I kind of did that with insurance. But one of the other ones that did catch my eye was IAI. Which is broker dealers. Yeah. Another group that looks pretty similar. It's a similar chart. Yep. Another group that's actually holding up pretty well on a relative basis. Yeah, this is a really interesting time to be looking at some of those group ETFs, especially in something like financials, insurance, a number of these that we've mentioned. 100%. Agreed. Good one. Okay, we are on to number 4. What do you have your fourth chart to watch for the month of April? Speaking of financials, and this is proof we did not compare notes until just before we started. Look at that, independently, folks. I came up with Progressive, and looking at financials, I would say there were 3 areas of financials that I thought were really compelling. The one was Berkshire Hathaway, which is just kind of it's really not a financial; it's a industrial conglomerate. It's too obvious. Okay, let's get a little more granular. The second area, and this shout out to Jay Woods, mutual friend and Stockcharts contributor for many years. Yep. When I interviewed him on my podcast recently, we talked about exchanges, right? Yeah. ICE and CME and other these that have really good uptrends. Yeah. Progressive and insurance companies are the third group that I think just stand out in the financial sector. Yeah. I mean, again, PGR I think is interesting because
you think about sort of the sideways choppy action that you saw in the XLF. Progressive is almost, it did that back here. It had that really good support level around 230, right? So that was the low from early November, the low from December and January, and then it resolved to the upside. So it's sort of like if the financial sector breaks out and then tests that breakout level from above and then just continues to hold it. It's sort of like what I hope the XLF would look like. It's sort of done it.
Yeah.
So now, again, upward sloping moving averages. We're making new swing highs. We're making higher lows. We're above the 50-day. The momentum is excellent. So the RSI is consistently above 50. And most recently, at a time when so many stocks are breaking down with much weaker momentum, this is one actually holding up with the RSI in the upper half of the range. Relative strength is improving. So again, charts like this in 2024, kind of a dime a dozen. It's like it was hard to not find those.
Right.
Now it's like this actually means something for a stock to be holding up. And we haven't talked much about the defensive side and the dividend kind of income component.
Glad you brought that up.
Even with the stock all the way up in the 280s, up from like the 120s on an adjusted basis, still has a healthy dividend yield. And I think that adds a really compelling component to your portfolio in this kind of environment.
Yeah. No, this is a great name. I mean, this is just another one that's got such beautiful relative strength, just heavily trouncing the market.
Yep.
God, and those moving averages just, again, in the right order. This is just one of those names that is working.
Yeah.
Which is funny because we're going to talk about that again with my fourth pick, a name that is just working. But this is a great pick. And it's fun that we're talking about the group, we're talking about the individual names.
Yeah.
I mean, I struggled actually with that insurance group because I was tempted to just pick 5 insurance stocks and say, these are the things that are working right now. Go have fun, have at it. But no, this is great. I'm glad that we got an individual name in.
Yeah, and I think with certain groups, like with Aerospace Defense, with insurance, like if you have conviction on specific names, if there's a dividend component, a particular nuance that makes it feel like you have an advantage with that specific stock, I say go for it.
Yeah.
If not, and you just want exposure, ETFs are super low cost, and especially the ones we're highlighting are low cost and fairly liquid, and I think are a decent opportunity.
That is a beautiful thing about the modern financial markets is we have those options.
Lots of levers.
We have those flexibilities.
Yeah.
So, okay, I mentioned we were going to talk about moving averages here for my fourth pick. My fourth one, again, is going to be just a name that is absolutely working. And I'm going to use the multiple time frame thing. We're going to bring that back into the conversation. So my fourth pick is going to be ORLY. This is O'Reilly.
Yeah.
I don't know if anyone knows this, but they sell automotive parts. So one of the big players in that space.
Yeah.
Again, we talked about the theme with financials, right? There's a little bit of a conversation there about deregulation and things. O'Reilly is a really interesting one because technically, I think there's a lot to love on this chart, but also you're dealing with this incredible tariff conversation, new tariffs floating around, autos right at the center of it. We're talking 25% tariffs on autos, on new cars coming in. If that does play out, I think you're going to see a lot of people who are saying, well, I'm not buying a new car. I'm just going to fix this old thing that I have sitting in my driveway.
Yep.
So things like O'Reilly, things like AutoZone as well, those start to really make sense. It makes complete and total sense to me that this stock is at all-time highs.
For sure.
Just absolutely flying up. Again, you can see the relative strength there is just gorgeous. It's really, really taken off, especially in the last month or so, month and a half, I would say.
Yeah.
I do think that this is stretched to me. So you can see, I mean, again, we talked about those horizontal lines. I've got my green line down a little bit lower, so I would like to see this come back into this kind of thin consolidation level here. But I do think this is a name that's just absolutely working. It might be one that you just kind of got to take a flyer on and say this tariff conversation isn't going to end anytime soon, and so I think this theme is going to continue. And the reason that I'm comfortable saying that is that, again, I mentioned these little tabs. I mentioned these style buttons that I have over with the weekly charts. So again, a 5-year weekly chart, a 7.5-year weekly chart, and then a 15-year weekly chart. It's all the same chart. The only difference between these buttons is that one is 5, one is 7.5, and one is 15 years. The indicators, the structure, all that is the same. So when I bang through these, check this out. This is the 5-year chart. Look at that freaking uptrend in this thing, and it's heavily outperformed the market. Now let's zoom out to 7.5 years. Look at the uptrend in this thing, and it's heavily outperformed the market. Now let's zoom out to 15 years of data here on O'Reilly. What can you draw a straighter line than that in the market? I mean, that is like the most gorgeous uptrend that you could possibly imagine.
Yeah.
And again, look at this thing, heavily outperformed the market.
Yeah.
This is a name that has just continued to work year after year after year. And now, on top of it just continuing to work, you've also got a little bit of a theme. You've got a reason for it to work. So if you buy into that story, O'Reilly is one to definitely watch for the next month, maybe even longer.
Yeah.
But you're seeing the same thing too with AutoZone. So it's kind of a toss-up between those two. They really do move together. They're kind of doing the same thing. So you could pull up AZO as another one to sort of confirm it. But ORLY definitely caught my eye.
It's such a great chart. The moment you said the ticker, I immediately brought up the weekly chart because I'm thinking that is one. You'd be surprised to see how consistent that it's just been doing quite well.
Yeah.
And what I love about it, a lot of times you have like an inflection point. Something like the tariff conversation means, auto parts were struggling. This might be the turnaround. These are things that have been working for so long, so I know a lot of people are hesitant to buy new highs because they're like, well, is the theme over? I think that conversation shows how there's potential further upside, right? I mean, just that's the juice.
It definitely is.
A reminder that, again, if you're ever fearing buying the new highs list because you feel like you're too late, look at Palantir up until recently. Look at O'Reilly. Look at some of these names that have compounded their gains over years. Like, new highs are often a really good starting point to further gains, right?
Yeah. I mean, this is a name that's outperformed the market by over 450% over the last 15 years.
That's crazy.
And I don't know if you know this, but they don't actually have any AI component. They're not technology. They sell like oil and like filters.
It's old school,
Yeah, it's kind of interesting. Yeah.
There's still a need for those things too, I guess, right?
I think so.
I like that pick. I almost went there. I'm so glad that you did. And a lot of times when we come into these, I pick them hoping you're going to pick a couple names. I'm like, if you could just make sure we get that out there. So I'm glad we were able to talk there.
There you go.
All right,
fifth and final, right?
My last one. So this is probably the opposite of your fantastic uptrend, only because this is a sleepy defensive sector, but one that has become very growthy. It's utilities, right? So AEP is a kind of Midwest-based utility company, kind of classic, basic, conventional electricity name. Ignore what I just said and ignore everything but the chart. The chart's strong, and I think that's what compels me. I mean, and again, when I run regular scans, when I just go through the normal process of identifying strong charts, then I look to see what sectors are represented. And I think more recently you're seeing a lot of utility companies. A big part of this argument, non-technical, is the energy requirements for AI, the energy requirements for cryptocurrencies, and not to get too much into the weeds, but like AEP has been super foundational with the cryptocurrency needs and providing a lot of that electricity and setting a roadmap, which means I think there's a lot of upside given that continued growth area over the long term. But in the short term, I like the fact that it's breaking out and it's above moving averages. This came on that same scan where I'm looking for stocks with moving averages in the correct order. I think that's constructive. If you look at the chart, September from last year, we pulled back. We made a peak, and then the fourth quarter was a big pullback to the 200-day moving average. From there, we've regained that breakout level around 102, 102.50, broke above it. Resistance now becomes support, classic technical concept. Where that, you draw a nice horizontal line and that captures the support level. That's also a bounce off of the 50-day. So when I see a breakout above resistance, that classic kind of retest, and then the reemergence, sort of a reinitiation of the uptrend, that's what usually implies much further gains to me. And that rally in the first quarter, obviously at a time when mega cap growth is struggling, means a stock like AEP completely outperforming performing the market. It's not a lighted up kind of dividend, but it's above average and not a bad part of this. So when you have capital appreciation where the price is going higher, you have a dividend component, which means you have that income source as well. I think that's a pretty compelling setup. So utilities are really trading more like a growth space, but charts like this are holding up with some other growthy areas are really starting to struggle. I think it's a compelling setup here.
I really like that structure, the breakout, the retest, the bounce, now moving up back into new highs. This is a great chart to watch. I want to ask you, there's a little checkbox sort of down lower in the workbench that allows you to turn off dividend adjustment. So when you see a name, we had a big yield name earlier with Progressive. Now you got another that's 3.5% basically. How do you think about those dividends? Do you ever turn off dividend adjustment and think of the chart a little differently?
I do. So what I usually do with a name, and this is why I have the full quote on pretty much at all times, I always glance up here. And if the dividend yield is like above 2%, it's like a number, which is probably going to impact things. I always look at both. So in the process of analyzing, because this is basically kind of an artificial price action because it's adjusting for all those dividends, which are pretty significant. And with some stocks, that can be a huge adjustment. So I usually start with the adjusted data. I always go here, particularly if I'm focusing on specific levels, just to see if there's any big changes that would make. But since we're focusing so much on relative strength, you have to remember with something like a utility company, with consumer staples, a lot of the names I've been sharing, some of the financial stocks, a lot of value sectors, the dividend is so important that adjusting for dividends is a very meaningful part of the relative performance story. So if you want to be in areas of the market that are outperforming, you want to adjust for dividends, compare to like the SPY or some dividend adjusted ETF, so then you can really understand by having exposure to this name, what am I doing relative to a position in the S&P? And that's why I think it's important to make sure you include that as part of your thought process.
Yeah, absolutely. No, and I mean, I like that you're showing how quick and easy it is to just turn that on and off.
100%.
I do exactly the same thing. The fact that new workbench has the little checkbox makes it so easy to just toggle that thing on and off. And especially, I'm a horizontal line guy, trading new highs, breakouts, that kind of thing. And so especially when you're looking at those price levels, I think it's crucial.
Yeah, agreed.
Before we jump over to the fifth and final stock here for me, we're talking a lot about relative strength, and I want to make sure that everyone knows how to set up this relative strength panel that you have and that I have. Let's take a look at that if you can really briefly. You've got it at the bottom of your chart.
Yeah, you have it at the top, which I actually love. Every time you bring up your charts, and your father has some fantastic charts with relative at the top. I think that's brilliant because it really stresses the importance. And I often tell people, if you look at nothing else, a lot of times in this environment, like focus on just the relative strength on stocks you own. And if you own things where that relative strength line is going down, I would question that position right about now because it just means you're not doing well on a relative basis. So the strategy I use the indicator called price-performance, which gives you kind of a nice relative measure over time. Dollar sign symbol means whatever ticker you bring up, that's the numerator. You have a denominator. I always tell people, make it a denominator that's meaningful. I use the SPY. I mean, I've worked at times in my career with a lot of portfolio managers that had to benchmark versus the S&P. So it's hardwired in my brain at this point. I know you use the VTI, which is a good benchmark. I've had people, again, if you could do a balanced fund as the denominator if you're trying to outperform like a balanced portfolio. There's a lot of flexibility in terms of what that denominator could be. But have it be something meaningful. And if you don't have a good answer for that question, make it a broad benchmark, which if you're going to park money in a passive product, that should be your denominator. And generally speaking, look for things that are outperforming that passive position, and you're going to do well.
Well, I like the fact that you brought the dividend adjustment stuff into the relative strength conversation, because if you do plug in something like $ SPX, you're only going to be getting the price movements on the S&P 500. It's
a little misleading at times,
So having SPY, I use VTI because it's a fund that I own in my long-term accounts. So it's kind of personally relevant. That's something that's meaningful and relevant. Do that. If you don't have a good answer, go with a broad benchmark. That's what I suggest. That sounds great. Okay,
last
fifth
pick.
and final for me. God, we're already to number 10. This is crazy. Okay, fifth and final for me is going to be eBay. We're back to consumer. This is like we can't get out of these two sectors here. Consumer discretionary name. Everyone probably has some story, some history, some personal experience with eBay. To be honest, I'm shocked that eBay is not actually bigger than it is. Another feature that I love in that full quote is that you get the market cap right up there at the top. I'm kind of shocked, given the valuations on some of these other names that no one's ever heard of, the fact that eBay is a $31 billion company, still big by any measure. But anyways, does have a little bit of yield, great scooter here, mid-70s, and just technically, this is, no matter what environment we're in, this is the type of chart that I like. Again, big uptrend, beautiful uptrend, consolidation. This is a beautiful ascending triangle. I'm not going to flip on the annotation tools and draw it for you, but I mean, just visually draw that trend line across these lows, right? And then use that green line that I've drawn to draw the top of the ascending triangle. I mean, this thing is just gorgeous. You've got the moving averages just all flying to the upside. The 20 is not above the 50, but that is a very short-term average, and especially for the way that I trade. So that doesn't bother me a ton, especially considering that the stock itself is above both of those moving averages. Still a little bit of consolidation to work through here. We do have a little bit of overhead supply in the near term, but relative strength is just absolutely cruising on this thing. It's a beautiful pattern. I mean, this is the kind of thing that the technical analysis lets you do, is find a name that is working, that's beating the market, and draw some levels where you're interested in, set those stops where you need to get out if the trade goes against you, and just let it ride. A really, really interesting one to watch right now. I wish I had a better kind of fun story of why I think eBay is working well right now.
The chart's good, right?
But
Isn't
the
that
chart's
enough?
good. Yeah, I mean, we got the O'Reilly and the financials and insurance and all this
Yeah,
stuff.
we went
but
deep in the non-technical
I don't know.
stuff. Okay.
This one's just, it
good
just
chart.
looks great.
Yeah.
Technically, it looks great.
Yeah.
If we zoom this thing out too, it is a little bit interesting. So this is a 5-year chart. Let's step back just a little bit more to a 7.5-year chart. Has not outperformed over a long period of time. But what I do like, we kind of talked about this earlier, I like some of these trades where you can actually have different levels to it. So again, I think this, in the near term, we looked at the daily chart, I think eBay looks great. There's a little bit more overhead supply than you sort of initially see on the daily.
Yeah.
When you step back to that weekly, you can see these highs from 2021, right?
Yeah.
So I think that does provide a little bit of resistance for the stock, a little bit of overhead supply that it's got to work through. But again, if you put on the trade that's working well on the daily chart, and then you let it work through some of those highs on the weekly chart, you know some of those next levels to maybe add to the position if it can make its way through those levels and back up to all-time highs. So a really interesting one, I think, when you zoom out a little bit. Now this might turn cup and handily on the weekly. That's the thing that stands out to me, right? You got this big old rounded bottom. I think there's a good chance that this consolidates and puts in that handle on the weekly. Time will tell. I still just love it on the daily, though. Gosh, this thing is just a thing of beauty here. This is exactly what I like to find. So eBay, that's my fifth.
It's so interesting. I'd love to ask with this particular kind of name. I mean, some of the names we've been talking about, like very actionable, like it's broken out. It's like, yep, that's the time, or it's pulled back and it's like this time. This feels like one of those, like, it's like not quite breaking out. So how do you,
waiting game.
I mean, is this the kind of thing where you take a position today and then add more, I mean, an ideal situation, or is it more of a, here's the trigger and if and when it hits that, that's my entry point? Because some would maybe hesitate and say, all right, it hasn't broken out yet. Like, how do you think of
These
that?
to me are the perfect candidates for a buy stop. People love to forget that buy stops are a thing, right? Everyone talks about the sell stop. Oh, you get taken out of a position when it hits this level. You can do the same thing to get into a position. You can set your level where you're going to automatically enter into that trade if it hits that point. So draw your horizontal lines, come up with your price targets, come up with your entry targets. Maybe set a buy stop. Make it a small position so that you can manage it. Know where your stops are. Use those, whether it's annotations or the horizontal lines or whatever. Plan out that trade with your entry point and your stops. But maybe set a buy stop. That's how I like to handle a lot of those things. Or I like to let them work through that initial breakout and ideally come back and retest it from the top. So the setup, the sort of gold standard setup, right, is a breakout, retest, bounce. We mentioned this earlier with one of the other names. If you can see something that breaks out through one of those levels that I'm watching, goes higher, gets sent back down, and then retests that breakout level, but from the top this time, that's where I know if it can actually catch a bid off of that and bounce off of that level, then I'm saying, okay, the buyers are really stepping in to defend this level. I can now take a position. So it's a combination of being patient, but also maybe letting your brokerage do some of the work for you. Plan out that trade, have a buy stop in, and know how you're going to sort of map that trade out into the future with, again, laddering into positions with different phases.
If you do that kind of thing, by the way, I love the there's the auto horizontal line, which I love for that kind of thing because that turns green, that turns red. That helps you visually represent whether or not it's actually hit that trigger.
So that tool is right in here, the auto support and resistance tool. And it allows you to just drag this thing. You can see that the line is going to change red and green depending on where I am. So I mean, come up with whatever level makes sense to you. Maybe you want to be a little bit more conservative and you want it to be right at the top of that range. maybe you want to be more aggressive and you're saying, hey, this was kind of the resistance level that I'm interested in. And so if we're above there, I'm interested.
Yeah.
You can combine that with some trend line analysis. I mean, you got a bit of a triangle going on there. So use these tools. But yeah, the auto support and resistance level is definitely a fantastic tool. Kind of does that coloring for you.
Agreed.
So, Dave, this was a ton of fun. It was always
awesome.
fun, but this one especially. This feels like a pretty wild moment in the markets. We've done this during some,
this was
I don't want to say boring times, but some boring times.
This was a different experience.
This is a different experience, right?
Yeah, but fun.
Thank you for sitting down.
Yeah.
Any final thoughts? Any parting wisdom?
I mean, if there's one consistent take, I mean, a couple things. I mean, number one, when in doubt, zoom out, right? We brought up some weekly charts that just demonstrate short-term dislocation can be just fine as part of a longer-term growth story.
Yeah.
So focus on those compounders. And then the importance of relative strength. Again, it's always something you or I would say is important, but especially now. And I mean, again, look for things where the relative strength line is going up. It's going to help you find areas to ride out any period of market uncertainty.
Yeah, absolutely. I think my takeaway for everyone, we're throwing ideas out there. We're throwing setups that are catching our eye. Yeah. The key is that you got to plan out those trades, right? Use some of these tools that we're talking about. Draw those lines, whether you're writing it down on a piece of paper or you're marking it up on the charts, whatever it is. Plan out your trade. It's not just about saying, I'm going to buy this and we'll see what happens 6 months later. Yeah. It's, I'm going to buy this if it crosses here. My stops are going to be here. My next entry is going to be here. Yes. My price target on the name is here. Plan out those trades.
Hope is not a good investment strategy.
Hope is not a good investment strategy. Dave, I want to thank you again. Yeah. Viewers, I want to thank you for tuning in here on Stockcharts TV. We're back in action in the Stockcharts TV studio. It feels great, especially to have Dave Keller with us. So thank you all for tuning in. Remember, give this video a like if you did enjoy this thing. I am sure that you did. This was a great show, right? We had a good time. You probably had a good time. Give this video a like. Subscribe to the channel for more great content like this with Dave, with myself, with Julius DeKempenaar, with Tom Boley, Mary Ellen McGonigal. We got so many fantastic contributors on the Stockcharts TV channel and also on the Stockcharts website, so stockcharts.com as well. Those written articles you've been writing for a long time, we've got so much great content for you. So subscribe, and we will see you next time for another special. In the meantime, my name is Grayson Roze with stockcharts.com. It's been good. Chart on, my friends.